This is Mommy Beluga Investing.
Hi, back again with me, Rati and Mami Beluga Investing. In this video, I'll try to provide updates for Singapore Airlines performance. The last 2 years have been especially difficult years for the travel industry, and Singapore Airlines is not exempted from that situation. Now we are hopeful that the air travel will come back in full swing soon. After going through the numbers, my quick take for Singapore Airlines are, the first one is that it posted profit and surpluses of operating cash for the first time since the onset of the pandemic. 2, considering its resilience during crisis and relatively fast turnaround, I am kind of interested in making some positions in the company. How do I come up with the conclusion above? Follow my analysis till the end. Please consider to subscribe because it means a lot for a beginning YouTuber like me. If you have any comments or input, do not hesitate to put in comment section. It'll probably help me to get more perspectives and learn more. You can also access this channel in podcast version through Anchor FM, Spotify, Google Podcasts, Apple Podcasts, and other podcast platforms. Alright, before getting into the data, I read out the disclaimer first. Disclaimer, this is an amateur video. I started this channel to record my journey, learning and practicing investing from scratch. Over the time, I made some changes with the intention to keep improving this channel. Still, this video shouldn't replace any financial advice, and it is a suggestion to take position, buy or sell in the stock market. Please conduct your own research before making any decision, but if you do your own research, I hope this video and this channel could be useful somehow. Send in your comment and input in the comment section down below. Now let's start with a very quick background of the company. Taken from its website, here's a brief history of Singapore Airlines. The first flight of Singapore Airlines, or then Malayan Airways Limited, was on May 1947. Then in 1963, the Federation of Malaysia was formed on the 16th of September. To commemorate this, Malayan Airways Limited becomes Malaysian Airways Limited. Then in 1966, Malaysian Airways Limited becomes Malaysia Singapore Airlines, or MSA. In 1968, the sarong kebaya is designed by French couture Pierre Balmain and becomes the signature outfit for the Singapore Go. The company then separated into 2 airlines. In 1972, Malaysian Airlines System and Singapore Airlines as we know today. Singapore Airlines is huge. It consists of passenger service, cargo, repair, maintenance, and so on. The most highly visible services are the Singapore Airlines itself, Silk Air, and then Scoot. Silk Air commenced operation in 1989 as Tradewinds Airlines and then 1 April 1992 as Silk Air. In 28th of January 2021, quite recent, Silk Air was folded into Singapore Airlines, while Scoot was established by Singapore Airlines in 2011. Singapore Airlines annual report listed 2 largest shareholders. They are, the first one is that Napier Investment Private Limited with 33.25% per share, and the second one is Temasek Holdings Private Limited with 22.16% of the share. There also the third one, which is Tembusu Capital Private Limited, which is deemed to be interested in around 994 million shares, in which its subsidiaries, including Napier Investment Private Limited, have interest. Based on the information available to the company as of the 3rd of June 2021, 44.14% of the issued ordinary shares of the company are held by the public. Little digging, Napier Investment Private Limited is a subsidiary of Tembusu Capital Private Limited. Furthermore, Tembusu Capital Private Limited is a subsidiary of Temasek Holdings Private Limited. And then Temasek Holding Private Limited is wholly owned by the Singapore government or the government of Singapore. Napier Investment becomes the top shareholding of Singapore Airlines stocks in 8 June of 2020 via right issue. So indirectly, the majority of the stock is held by Singapore government via Temasek Holding. Yeah, okay, so that was a brief look at the company. Now let's look at its current performance. To evaluate Singapore Airlines performance, here I plot 3 layers of information. They are the earnings per share, here I plotted as red round markers connected with red line. I also added a green dash line to indicate the zero earnings, where earnings below this line indicate the company recorded a loss in that period. We can see that Singapore Airlines recorded a loss for the first time in their 2020 financial year. That is on the 31st of March 2020 report. The loss continued for the subsequent quarter until the second quarter of 2022. Things seem to be turning around as it reported a profit on its third quarter of 2022. This is first profit since the COVID-19 pandemic began. Due to Singapore Airlines financial year end at 31st of March, the third quarter of 2022 happened on the 31st of December 2021, which is the last dot in the plot. Going through the investor letter, it seems that all of the profit currently contributed by their cargo service, their passenger service segments, which are Singapore Airlines itself, Silk Air and Scoot, are still operating in a loss. With the opening of the international travel, there is a high hope this will improve going forward. All right, now let's take a look at Singapore Airlines cash condition. Here I plot the company's cash position as green bars. The latest letter from the company announced that this is the first quarter since the onset of the pandemic that it has operational cash surpluses. Since the onset of the pandemic, the company reported operating cash burn. As the third quarter of 2022, Singapore Airlines have about 12 billion in its stash. This information will be useful when we compare it to the next layer of information, that's the current liabilities. So here I plotted the short-term liabilities as red bars. Normally, I would like to see that the company's cash position able to cover their short-term liabilities. That is the green bar, which is, it means that the green bar is higher than the red bars. From the data they have here, by the fourth quarter of 2021, Singapore Airlines had more cash compared to their current liabilities, which is good. There were only one other occasion where that happened before, that was in 2011. The latest investor letter for third quarter of 2022 didn't give any breakdown of the current liabilities. Hence, I can't comment on the current liabilities coverage. The final layer of information is the company's long-term liability. Here I plot as yellow bars. We can see that the long-term liability have been steadily increasing since 2016. Yep. The latest increase in liabilities partly contributed by the mandatory convertible bonds, which from my understanding, issuing bond which can be converted to stock upon maturity. Looking at the company's recovery, Singapore Airlines recovery, it makes me interested in placing small position perhaps in this company. I skipped the discussion on dividends since for the past 2 years during the pandemic, Singapore Airlines did not distribute any dividend. I may include the dividend history and dividend yield history once the company gives dividend again. Right now, my next question is whether the current price is reasonable enough for me since I'm interested in putting a small position in the company. As usual, to see the reasonable price for me, I plot 4 layers of information. They are: the first one is the share price itself, share price movement. The second one is the 10 earnings multiply, as green dashed line on the screen. Then the 15 earnings multiply in yellow dashed line. And finally, the 20 times earning multiply in red dashed line. Now, Singapore Airlines stock doesn't seem to be in a growth phase, or it doesn't seem to be a growth company with premium stock price for at least the last decades. Okay, those who have followed this channel have seen my previous videos would know that my reasonable price is usually at 10 times earning multiply, which is currently not applicable to Singapore Airlines because annually Singapore Airlines earning is still in the red. The 20 times earning multiply is currently at $1. As the making of this video on the 20th of May 2022, Singapore Airlines share price is at 5.47 per share. I kind of expect that the share price will go up due to the last quarter profit and the expectation from the market of the post-COVID economic recovery. So even with the current price, it's still way too expensive, let alone the next increase. Historically, Singapore Airlines share price hovered around 15 to 20 times earnings multiply. For now, though, I'm interested in small position, but the price is still expensive, noting that I'm actually a fan of the brand. Alright, now wrap up. After looking at the numbers and other qualitative insight, I can say that first, as we have seen the data before, the company posted profit and surpluses of operating cash even for the first time since the onset of the pandemic. This is a good news. Considering its resilience during crisis and relatively fast turnaround, as we can see, as we have discussed during the video, I'm rather interested in making small position in the company. However, the price is still expensive for me, though I'm a fan of the brand, Singapore Airlines brand. If you watch my previous videos on my family investing journey and strategy, 6% of investment yield per annum on average will sort of guarantee me to retire in around another 6 years. So I'm generally not that keen on company that doesn't give a good dividend yield like Singapore Airlines. It's another negative point for me with regards to this company. Alright, if you find this content to be informative or interesting, please consider to support by clicking the subscribe and probably also the like button. I also appreciate your input to improve this channel through the comment section. You can also access this channel through a podcast version through Anchor FM, Spotify, Google Podcasts, Apple Podcasts, and other podcast platforms. The channel is the same, Mummy Beluga Investing. Thanks so much for watching, and I'll see you again in my next video. Bye.